Hello viewers, you are welcome to my channel. My name is Sunday and I welcome you all into this week 41 GU analysis. Alright, if you are new, please do subscribe to my channel, hit the like button, share my video. If you have any comment, leave it in the comment section. And if you want us to coach you one-on-one, please reach out to us. And don't forget to hit the notification bell so that anytime I upload any new video, you'll be the first to be notified. Uh, as a trader, the first thing we should always do, is to check um, um our calendar, our FS book or for a factory. When you go to forexfactory.com, go to the calendar, you see the event, the activities, the upcoming activities for the week. So it's very, very important being tuned and always go through it to know the next news event is very important. All right. That being said, this is the monthly chart. All we need to do or establish here is for us to just check the directional bias to know where the trend is going. As you can see, the trend is being bearish. All right, it's being bearish. It's been bearish. That we should understand. Even though there's a pullback, all right, it's experiencing a pullback right now. If you go to the lower time frame, you will see that it's bullish, but this is a pullback. All right, this after this break of structure, this is the last break of structure. All right, after this last break of structure, all right, after this break of structure, I don't know, after this break of structure, we are experiencing a pullback. All right, after this break of structure, you see there was a pullback. This break of structure, there is a pullback. All right, that we have established, we are completely downtrend, even though there's a pullback here. All right, now the next thing we need to note is we scale down to our weekly time frame where we need to map out our structures. All right, yeah, you can see when price came down to this point, you see there was a change of character for this pullback to happen. You see this pullback that you saw on the monthly time frame. This is the result of that pullback. All right, don't forget that we are bearish, so let's always have that in mind as a trader, that our higher time frame tells us that we are bearish. So any opportunity that we should be looking for is to sell. Even though right now we are experiencing a kind of a pullback that seems we are bullish. If you want to trade this, please know that it's a short-term move. All right, don't over exaggerate something. This is a short-term move. All right. Now that you see, marked out, I've mapped out all those the resistance, support, and all that. So you just do the markings on your own too. Do the markings. So after you have done all the markups, After you have put all these things, and what you need to do is to scale down to the daily time frame. Daily time frame, you can see break of structure to the upside, break of structure to the upside, you see another break of structure, another break of structure. Now, this is the last break of structure and price is pushing down. All right, remember that in the monthly time frame, we are still pushing up. All right, that is a pullback. And right now, the daily is still pushing down. Now, if you see it clearly, you discover that it's getting ready to start pushing up. All right. Okay. Remember, there is what we call time correlation. So the best time to always place your trade is when your entry time frame correlates with the higher time frame. Then you just note that. All right. Anytime you want to place a trade, always check to ensure that your time for execution correlate with the higher time frame. All right. Now that is a pullback, the higher time frame is making a pullback, you can buy. All right. Your buying should be a short term because the overall time frame is bearish. All right. Because once it hits the level of resistance, a price will turn and start making that big push to the downside, and that is where the real deal is. You don't trade against the trend, we trade with the trend. All right. So as it is now, if you analyze this chart, you discover that there was a pullback here. Then this guy here, this demand zone here, created a demand and pushed up and broke this structure. It got to this point, created a high, then there was a sell-off to this point. All right, the supply here pushed the price down back to the demand zone. All right, what we should be expecting right now is that this demand zone should trigger and push the price back up. All right. Now, once that happens, that means we should be expecting another break of structure. We should be expecting another break of structure to the upside. Then price will come like this. Price will go like this. That is normal for we to say, okay, this trend is still bullish. All right. But with what we've seen with the higher time frame, it's not going to be like that because we are bearish. Even though there is a pullback that seems bullish, we are bearish. So that we should always have at the back of our mind anytime we are doing analysis or anytime we want to place our trade. So this is daily time frame. This guy here, we have to pull back a little. We have to pull back, retest this resistance level here. To retest this resistance level here, then price will now resume the underlying trend. This guy will push to this point, or it might even push a little above, but it will not break this high. All right. It can get to this point, then come back. All right, to further buttress this, to make it clearer, let's use fib 2. All right, you put it from here to this point. All right, this is 0%. This is what 23.6. Oh, one moment, sorry, because it's having a push down. We are going to measure it from the top to this level. So if we ask where should price push back to, at most it should pull back to retest this bullish underblock here. This bullish underblock, this is a bullish candle, the last bullish candle before the bearish trend. This is a bullish underblock. All right. The highest price can go, it should come back and interact with this guy here. It should come back and interact with this guy here. That is the highest it can go. All right. It should come back and interact with this guy here. You understand? So that is the thing here. It should come back and interact with, let me remove all those things so that we won't get confused here. All right. Highest price can get to, if we put our fib 2 here to this level, price should come and interact with this point here. But when you look at it critically, you discover that the push to the downside all happens here. All right? If the push to the downside happens here, so between here and to this place is what we call change of character. So if you scale down now, you will understand it better. If you scale down now, you will understand it better. So when we scale down to, uh, so this daily time frame, if you are the type that place your entry on the daily time frame, if you're a swing trader, don't expect this move again to break the structure up. No, because on the higher time frame is we are pointing bearish. Even though there's a pullback, the pullback should not take out this high. If the pullback takes out this high, that means we are no longer bearish, we are bullish. All right. So be expecting price to come and interact with this resistance level. All right, then start pushing down. So let's scale down so that we understand it more clearer. So this is the 4 hour. You can now see that the 4 hour is already giving us a pattern. The 4 hour is already giving us a pattern. Now, let me just show you guys this pattern so that you see. You see, the 4 hours is already giving us a pattern. All right? Okay. This is already a pattern that the 4 hours is giving us. All right. Now you can see that the 4 hour has already changed, is experiencing trend change. All right. This TC here, you see that price got here. This is the high from the higher time frame. We should remember price got a pullback. He tried to break it. He stopped here. He came down. He tried to break it again. This time he closed below. He came down again. He pushed. We cannot see he continued to come down. All right. At this point, he now came and pushed below this low. That means at this point, we say the trend has changed. So on the lower time frame, we are experiencing already trend change from here. All right. So price push to this point, and we now see a break of structure to the downside. This break of structure to the downside now means that this trend on the 4 hour time frame, there is change of trend, all right, from bullishness to bearishness, all right. That is what happened here. From here, it's been bullish, now is bearish, all right. So I hope that is clear enough. At this point, we now see break of structure. What caused the break of structure here? This is the other block that caused the break of structure. The last candle before this big candle occur. Okay, so this is the other block here. Now, if we look at it, this is what we call imbalance, all right, where price will tap into before it will tap into our order block. Now, because there's a break of structure here, you can now see that there's a little pullback and another break of structure again happens, all right, before this thing you see. But you will not see clearly until we scale down to a lower time frame, all right. But on the 4 hour time frame, we can see clearly that price we have to come back, all right, to tap us in, to tap into this other block here, all right, into this other block here before we can get a push to the downside again. Now, at this point, if you're the type that takes trade from 4 hour, all you need to do is place your entry here, all right, open your sell limit order here, okay, above this structure, then target this point of reversal here. All right. I hope that is very clear. Now, to further buttress the analysis, you take your flip through, come to from up to the downside. You can see that 79 aligns with this. All right, 79 aligns with this. Okay, you can see if you're the type that plays trade on 4 hours, this is your entry. You target this point. All right, 3 to you now see. All right, how many pips? 222, 227 pips. Then you give 60 as what? Stop loss. You know, now if you look at it, if you now scale down to the 1 hour time frame, all right, scale down to the 1 hour time frame. If you scale down to 1 hour time frame, you discover that there was another break of structure to the downside. After this first break of structure that happens on the 4 hour, there's another break of structure to the downside. All right, this break of structure is this 1 hour. This is the 1 hour break of structure to the downside, another break of structure to the downside. Then there's another break of structure to the downside as well. All right. So that we'll see all those things and know exactly what we are doing. All right. Now you can now see that there is another other block here that we need to really be very conscious of. Okay, if you're the type that enters trade, that takes trade from 1 hour, you place your trade here, you place the open here, little above this structure, then you target the same high. You know, one thing, and you can see that this is an imbalance here that price will tap to before it enters, before it trigger you in. Just set a sell limit here, order here, it will tap you in. So that is just it, guys, on this